Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 27th of July. All right, now coming into Friday's trading, we don't have a huge amount of activity going on, but we have come through the ECB unscathed. Now, the ECB, as expected, stayed on track, and that's just seen the euro slide to the downside. You can see how when it broke down through sort of 116.80, broke down, came back, retest the level, and it's now sitting around 40. It is a little bit oversold, so just keep an eye on that. Now, the Aussie and Kiwi sort of pretty much followed the whole, followed Euro, but I'll also show you as well in a second, that bounce or that move yesterday in the offshore yuan where it went up a couple hundred points and then went down about 700. So we'll have a look at that in a sec. Dollar yen, okay, now that some of these trade issues are sort of dissipating, it doesn't really know what to do. It's just trading sideways through some trend lines. It is above the cloud at the moment, and we do have some Tokyo CPI numbers out. So if they come out strong, then we may see dollar yen actually just slowly squeeze to the top side. Dollar CAD, we've got that nice resistance line here. It does seem to be coming into play. Oil has stabilised now around 69.5, so that should keep it on a pretty even keel for the moment. Sterling, once again, just following euro and that sort of dollar move. It's a little bit interesting because now we've got dollar strength across the board here, right? And that's, mainly because of euro dropping lower. It is 58% of the dollar index basket. If we have a look at the overriding factors behind what's going on, if you have a look at the US numbers from yesterday, it was very, it's not funny to see, but the durable goods, right, came out at the same time as the ECB. And I was mentioning this yesterday in the trade zone. When there's a central bank meeting, if there's other sort of reasonably big data coming out at the same time, the market just pushes it aside. They don't even really look at it. What we had is the ECB sort of holding put, no changes, no updates. Market didn't like it, so the euro drifts off. Where at the same time we had weaker durable goods. Now, in normal market conditions, without a central bank release, that 2% difference would actually, I would suggest, push the US dollar down 30 or 40 points. At the moment, no one's even looking at it, right? Because they're so fixated on the central bank, and that's where the market really sort of comes into play. And this is where we connect the dots to what is actually coming out today. So if I just scroll down just a touch here. Okay, and this is where you can piece together the main parts of where the trade day is going to go today. So we've got the Japanese CPI numbers. The Tokyo numbers are the main inflation numbers for Japan. So we're going to have a look at that. Now, inflation is usually spot on or pretty much neutral, but we'll focus on that. With the Aussie, we do have some PPI data. Now, that's not a massive number, but once again, any sort of significant variance may push this thing around. The key sort of release will be the US GDP number, the advanced number. This is like the early number. So we do have US dollar strength in the market right now. So when you look at that US number, what we're trying to do is match it up with the technical picture at the moment, right? So at the moment, we have, a falling or rising US dollar, and all the other majors are falling, right? So this US number is going to be very important to the next move, and traders should and probably will wait for it, okay? If it comes out weak, okay, well, then we're going to see a bit of a correction in all the majors. They should just drift back into the range. As I said, there's no real policy change from the ECB. So weak US numbers, the euro just rallies back to 117 the figure. But on the odd chance we do get some strong US GDP numbers, well, then we should see a continued move lower for Aussie, Kiwi, Euro and Sterling. And we should start to see dollar yen start to move back towards 112 at least. Okay, it's the sleeping giant. It has been pulled from pillar to post on all these various trade tariffs and deals going through and all over the place. Dollar CAD sitting here, if anything, it's in a short-term sort of downtrend. So you'd have to think this key level here is going to be critical, around 131 the figure, and we'll see how that plays out with those US numbers. Now, just coming back across, as I mentioned, there were some weird things going on yesterday. So not only the ECB, but also the offshore yuan, right? This thing has got a mind of its own. So yesterday, during the Asian session, I was mentioning that you want to keep an eye on this during Asia. if it broke through this level, we're going to see something. We'll see it move lower and push the Aussie, Kiwi in particular higher, and that's exactly what it did. But you know what? It's just like a stop loss run, big one. It was down about 150 points through that level. Aussie and Kiwi topped out at the same time, and then it sort of bounced back into the range and then took off. Right, this thing really took off. I can see the offshore yuan heading up towards 10. I mean, this is, if these trade tariffs kick in, the Chinese yuan is going to be very weak indeed, and that's not going to make old Donald happy, even though he's the cause of the whole thing. Now, the dollar index, as I said, has the move is a bit dollar based. That's mainly because euro and sterling have fallen. You know, they make up between them about 70% of the basket. So if they both fall, the US dollar rallies. Now, we do have a previous high here, just under 95. But to me, fundamentally, the US dollar is strong. The Fed are still talking about raising rates. And don't forget, we just had the ECB, and they're talking about they're on hold for like forever. All right, so you've got to think the US dollar is a buy on dips and should continue higher. This all fits in nicely with the fundamental picture of the strong dollar. Regardless of what Trump says, you know, he comes out and says, oh, you know, we don't want the strong dollar, it's hurting us and all this sort of stuff. Who cares? Fundamentally, you've got the strongest economy in the world, so that's what you get. Now, if you're looking through the various news wires, just keep an eye on oil. I mean, you think the Arabs and everyone else who's involved in oil, the cartels and OPEC, I mean, they've got enough money. You'd think they'd have enough to do without sort of trying to change things. But there are a few things going on which could interrupt oil supply. So just keep an eye on that. That could push the price of oil back up, okay? And that could see dollar CAD sort of drift lower. But, you know, it's all a little bit messed up. The main things, sterling slides, adds to Brexit concerns. Well, that's just rubbish. Sterling just fell because of the strong dollar and euro falling. Euro drops most in a month as EC stays on course. Well, that was sort of like a bit of a given. And this is what we're sort of starting to focus on. This is where the Asian session is really going to come alive over the next, well, not just 3 to 6 months, over the next year or two, is the China, the price of the yuan, these sort of trade wars, all these sorts of things. The offshore yuan, even though it's not a major currency out there, people are trading it more aggressively now. It is trading technically very well. And it is giving us direction for a lot of the Asian currencies. So you want to keep an eye on that very closely. If it weakens, the rest of the Asian currencies weakens, including the Aussie and Kiwi. If it strengthens, then the opposite. And that's it, pretty much. And like here, just all speculation linked to trade optimism with the CAD. Now, they're hoping for a good NAFTA deal. Mate, who knows with Trump? At this stage, we're waiting for clear evidence of what to do than plainly just sitting there sort of guessing what some of these media releases are saying. So just coming back to the majors, we do have, we've got some good levels here. And the main thing to focus on for me, when I sort of, if I turn the screens on the morning, I get a smile on my dial. It's when these major pairs are correlating, and they are correlating quite nicely. Okay, Aussie, Kiwi, Euro and Sterling. You can feel very confident watching these currencies. And if they do move, they're all going to move together. Right, and coincidentally, hopefully the dollar yen kicks in. Dollar CAD, I think it's got a mind of its own. It'll do whatever it likes at this stage. So that's where we are at the start of the Asian session. Just having a quick look here. Give you one last quick look before I sign off on the yen crosses. Now, the yen crosses, dollar yen is the sleeping giant. It is sort of trading sideways, but we are starting to get some sort of uniformity across the rest of the crosses here, especially with the cloud formation. Now, if dollar yen, what you're looking for is if all this trade tariff stuff settles down, dollar yen should rally. Okay, and this is where the Tokyo CPI numbers come into place. If they're strong, it should rally. And you're looking for the pairs that probably have the best setup for a move to the top side. Now, we know Euro, Sterling, Aussie, and Kiwi are all moving lower against the US dollar. Now, that doesn't mean they can't move the opposite way if the yen or the dollar rallies against the yen. So you're looking for the pairs with potentially the best setups on the top side. To me, it looks like, Sterling and Euros, Euro yen and Euro sterling yen, probably the two best pairs at that stage. So keep an eye on the yen crosses. They haven't got an awesome setup at the moment, but there are a couple of pairs there that are starting to form some really good shape, and that leads us pretty much into getting stuck into the market today. So don't forget as far as looking for some leading edges here in the market, US equities. Well, the Nasdaq was down 1.4%, probably on the back of Facebook, but the Dow Jones up 0.44. The Nikkei is due to open up plus 80, and that's where these Tokyo numbers come into play. Now, for those traders who aren't aware, the Japanese numbers are completely different to all other numbers. Okay, if you get strong number here in the Japanese numbers, dollar yen rallies, right? It's not yen rallies. Okay, you got it completely wrong. If the numbers are weak, dollar yen falls. All right, that's the relationship between the dollar yen and the Nikkei. So that's your starting point is plus 80. So keep an eye on that. That's probably our lead into the Asian session. And once again, keep an eye on dollar yuan, the offshore yuan here. It did move a hell of a lot yesterday. I would expect some crazy action again throughout the Asian day. And if you're really desperate to look at what else is going around, then don't forget we do have Aussie PPI numbers. As I said, these are really low tier numbers. There's no forecasts. I mean, there's nothing to go with them. But you're looking for the yuan, all the data to line up, and that's where the potential trades could be today. All right, that's pretty much it, guys. The last part, obviously, where's the next major upcoming event? Well, to me, it's obviously the US advanced GDP numbers. We do have the final University of Michigan sentiment numbers there as well, but I think the US advanced GDP is going to really dominate proceedings. So focus on that. We've got clear correlating markets, so it's a good time to trade. And that's pretty much it from me. All right, guys, have a good trading day. If you have any questions, drop me a line, or you can always find me in the trade zone, and we'll continue working, trying to rip out some dollars out of the market. All right, guys, have a good one. We'll catch you later on. Cheerio.